I'm Nigel Stevenson. Well, for the next half hour, we'll be getting the first word on 2009 from an investment legend. And given the current state of the markets and the economy, you don't want to miss it. Jim Rogers not only lived through the 70s oil price shock, the crash of '87 and several recessions, he thrived through them. Well, let's get to the man himself. Jim Rogers joins us now from Miami. Mr. Rogers, thank you very much indeed for joining us once again on Bloomberg Television. I just said it in the introduction, you've seen recessions, slumps, crashes, you've thrived through them. How bad is it now?
It's amazing how old I am, isn't it? I hadn't thought about it that way. I've seen actually more than that. Well, this is going to be probably the worst since the Second World War as far as the American economy is concerned, and some of the, especially the UK, well, it won't be the worst since the Second World War for the UK, but it's going to be very bad for all of us.
People are talking about the D word, depression. From what you've just said, it doesn't sound it's going to be quite as bad as that.
Well, it could well be. As you remember, the Depression, 1929 was a stock market bubble which popped. We were going into a recession, and then the politicians around the world started making horrendous mistakes, and which turned it into a depression. It would have been just a normal recession otherwise, but the American politicians and then the European politicians, everybody got in the act, and that seems to be happening this time too, Mr. Stevenson. They're making a lot of mistakes.
I was going to say, it sounds like you're expecting some of the same. Are you planning for a worst-case scenario?
Well, I cannot tell you until I see how things unfold. Nobody knew in 1929 it was going to turn into the Depression. By 1931, some of the smart people had figured it out. These things unfold. I'll have to watch and see what happens. I'm certainly prepared for the worst, and if it happens, I hope I take the appropriate actions.
And given what you heard from the central bankers and from the politicians thus far, are you impressed or deeply unimpressed by what you've seen?
Well, I'm impressed, but very negatively impressed. It's astonishing how bad they're reacting this time. It is unfathomable to me what they're doing, and you would think that some of them would have read some history or interpreted history properly.
What about
Mr. Obama, our new president, Mr. Obama, has said, ran on a platform that he's going to do two things. He's going to tax capital. This is a period when the world is desperately short of capital. What a genius. And then he's going to protect America. Protectionism led to the Great Depression in the 1930s. So we've got a man now who says he's going to in favor of protectionism and taxing capital. If that happens, Mr. Stevenson, it's all over.
Is this going to therefore change the world economic order? You know, I'm obviously thinking of China here, for example.
Well, of course it is. Same thing happened in the 1930s. You know, in 1918, the UK was the richest, most powerful country in the world. By 1939, it was a shambles. There were exchange controls. The economy was a wreck. It was a horrible period. Same thing is in the process of happening with America. And if America continues to make mistakes, you're going to see that quick a transition.
You've now obviously famously turned your back on the United States, moving out to Singapore. What would it take, big picture, for you to come back to the US?
Well, I haven't turned my back on the U.S. I'm an American citizen. I'm sitting here in Miami. I mean, let's not get too carried away. I did move to Asia because I see enormous opportunities there, and I've got these two little girls that I want to grow up speaking Chinese and grow up knowing Asia as well as they know America. But yes, we have moved to Asia. What would it take me to come back to the U.S.? I don't know. I don't see anything that... I'm convinced that China is going to be the great country of the 21st century. I want to prepare my little girls. My little girls were born in 2003 and 2008. I don't see any way that America is going to become the great country in the 21st century again.
Is credit the biggest issue that we all have to work out how it's going to be solved?
No. Right now, what's happening is the American government is printing gigantic amounts of money. I think that, in the end, is going to be the worst problem. They're propping up everybody in sight, and throughout history, when you've done that, and you've printed gigantic amounts of money, it's led to inflation, and in some cases, runaway inflation. I think in the end, the credit problem is not going to be the serious problem. It's too bad that the American government would not let people fail. The big problem is, A, they haven't let people fail, and B, they're printing money to try to solve the problems.
Rogers' International Commodity Index has plummeted more than 50% since July. So are you still keeping faith with the commodities generally?
Well, faith is a terrible way to invest, Mr. Stevenson. I hope I don't invest on faith. One needs to invest on facts. But the facts are, you know, during this period of time, the only thing that has the fundamentals unimpaired are commodities. Farmers cannot even get loans for fertilizer now. Nobody can get a loan to open a zinc mine. The supply of everything is going to be even worse shape coming out of this. The IEA recently came out with a study showing that the world's reserves of oil are declining at the rate of 7% a year. Well, you can do the arithmetic. The supply of everything is going down, oil and everything else. We're going to have serious supply problems before too much longer.
And do you see also with the miners cutting production across the globe, or at least apparently doing so, similarities with what we saw in the build-up to, say, 2002, where we embarked upon this amazing bull run in all of the commodities? Do you see that happening again in a couple of years' time, once we've got through this particular recession, depression, whatever you call it?
Yeah, that's what I'm trying to explain. Yes, the fundamentals for General Motors are impaired. The fundamentals for Bank of America are impaired. The fundamentals for zinc are improved. The fundamentals for cotton are improved. No, the commodities will be the place to be if and when we come out of it, but even if we don't come out of it. In the 1970s, the economies were bad, but commodities went through the roof. In the 1930s, in the Great Depression, commodities were a much better place to be than stocks because there was no supply.
And this is going to continue. Let's talk about the precious metals to start with then. Gold and silver. Gold has come a long way off since you correctly said it would go through $1,000. Do you just buy now and say, well, we'll sit on that for a given time?
Well, Mr. Stevenson, I own some gold, and if gold goes, just to show you, I own some gold. If gold goes down, I'll buy some more. If gold goes up, I'll buy some more. No, gold during the course of the bull market, which has several more years to go, will go much higher. I think I'll make more money perhaps in agriculture for a while, but I own some gold.
All right. What about platinum, for example? Again, you talk about the motor industry. Catalytic converters clearly a huge essential part of that. But platinum, does that have a different trajectory, for example?
Well, it's more industrial and is certainly more tied to the automobile industry. I'm not buying it. I don't have any platinum in my pocket to show you, but I do own some platinum in my index. But I'm not buying platinum at the moment. No.
What about
but when and if it's time to buy automobiles again, platinum will be a spectacular play.
Again, because of the shortage, I assume.
The shortages, and then the demand will suddenly come racing back, and there won't be any inventories. This is the way economies have always evolved.
How do you then differentiate between the likes of the industrial metals, the nickel, copper, lead, tin, zinc, aluminium? They're all down massively since July, but at what stage, what are the equations you're running to see where the opportunities to buy are?
Well, listen, I'm the world's worst market timer. I'm the worst trader in the whole world, so don't ask me for the timing of any of this. But we do know that people are closing mines. We do know that the cost of the zinc, for instance, is below the cost of production now. Now, things can stay below the cost of production for a while because often it costs more to close a mine than to keep it running at a loss. So, but eventually, you will have less supply of everything, and you're certainly not going to have any new mines opened in the next several years because the economics of opening a mine are out the window now, and it takes 10 years to bring a mine on stream. So the reserves are going down, the supply is going down, and you're not going to have any new mines coming on stream.
Have you sold any of your metals in the last 6 months or so?
No, I haven't sold any commodities since the bull market began. I'm not very good at that. What I try to do is I was short Fannie Mae, I was short Citibank, still am short the investment banks. My way of investing is I try to be long the good things where the fundamentals are improving and short the things where the fundamentals are deteriorating. That's the way I invest and always have.
But you don't pick out specific metals to say, well, that particular one is going to be a problem.
No, not right now, because my lawyer won't let me buy individual commodities because, I'm always talking about them, so I buy my indexes.
Right. So what are the best way to get exposure? Is this through the ETFs? Is that the best way of getting it through, or on the spot market? What are the methods here?
Well, it depends on one's knowledge. If one knows a great deal about zinc or lead, then perhaps you could buy zinc or lead. But for most people, you should buy an ETF or an ETN, because those are the best. Buying an index for most people is the best way to invest in anything, commodities, stocks, or anything else.
So how long do you typically hold on to them then? It sounds to me like you've had whatever you've had, you've never sold, so you just keep quietly amassing?
Yes, that's the best way. That's the way I invest. I like to own things forever. The best way for me to invest, I have things I've owned for 30 years. I hope I own them another 30 years. I hope the fundamentals continue to be good. Commodities I've only owned for about 10 years. I continue to amass them. When the market collapsed in October, I covered my shorts, many of my shorts in the U.S. in stocks, and the things I started buying were commodities, China, Taiwan, and the yen.
And have you been buying specific metals or specific industrial side of things, given what's happening in China, for example?
No, only my index. I bought the metals, the Rogers Metals Index. Well, I did buy some gold coins. I do have gold coins, yes.
What about oil then? Where does that fit into the picture from your point of view?
Well, oil has been crushed, as you know. It's now below the cost of production in many places. It's certainly cost of production for alternate energy sources. So oil is going to make a huge comeback when it does. The International Energy Authority, who makes the studies, went to every oil field in the world, came to the conclusion that oil reserves are declining at the rate of 7% a year. You can do the arithmetic, Mr. Stevenson. In 15 years, there won't be any oil left unless somebody discovers a lot of oil quickly in very accessible areas, and the price of energy has to go through the roof again.
Let's get the latest view then.